The government quietly put $6,000 in a bill, and most seniors have no idea it is sitting there with their name on it. Your tax preparer probably never told you about it, and if you already filed your taxes this year without claiming it, you may have just handed the IRS money that was supposed to come back to you. Right now, as you are watching this video, millions of retired Americans across this country are leaving real dollars on the table. Not because they are careless, not because they are bad with money, but simply because nobody told them. The IRS does not send you a letter saying, "Hey, you qualify for this." They do not call you. They do not remind you. They just wait. And if you do not know to ask, that money stays with them forever. So today, I am going to change that for you. I'm going to break down exactly what this $6,000 senior bonus is, where it came from, who gets it, how to claim it, and what happens if you already missed it. This video could be worth thousands of real dollars to your household, so do not scroll past this. Do not close this tab. Stay with me all the way through because every single minute of this video has information that affects your retirement money directly. Let us start from the very beginning so everything makes sense. In 2025, the United States government passed a massive piece of tax legislation. It was signed into law, and it changed hundreds of rules inside the tax code all at once. The bill was called the One Big Beautiful Bill Act. Sometimes people shorten it to OBBB or OBBBA. Now, inside this giant bill, buried deep in the pages that most people never read, there was a very specific gift for older Americans. Not for young workers, not for corporations, not for investors with millions of dollars. This was specifically written for people who are 65 years old or older. People who worked their whole lives, paid into the system, and are now living on retirement income. The lawmakers called it the Senior Bonus Deduction, and when you understand what it actually does to your tax bill, you are going to wish someone had told you about this 6 months ago. But the good news is you are learning about it right now, and right now is still early enough to make this work for you. So what exactly is the Senior Bonus Deduction? Let me explain it in the simplest way possible. Every year when you file your taxes, the IRS lets you subtract a certain amount from your income before they calculate how much tax you owe. That subtracted amount is called your standard deduction. For most people in 2026, the standard deduction is $16,100 if you are single, or $32,200 if you are married and filing together with your spouse. That number gets subtracted from your income before any tax is calculated. Now here is where the senior bonus comes in. On top of that standard deduction, not instead of it, but on top of it, the IRS is now allowing seniors who are 65 or older to subtract an additional $6,000 from their taxable income. That is a completely separate deduction. That is an extra $6,000 that disappears from your income before the IRS calculates what you owe. And if you are married and both you and your spouse are 65 or older, that number doubles to $12,000. Think about what that means in real life. The IRS is saying, take your income, now take away the regular standard deduction, and then take away another $6,000 on top of that. The amount of income they are actually taxing you on just got a whole lot smaller. And when the taxable income goes down, the tax bill goes down. That is real money staying in your bank account instead of going to Washington. Now let us talk about the numbers in a way that is easy to see clearly. Imagine you are a retired person living on Social Security and a small pension. Your total income for the year comes to $35,000. Under the old rules before this bill was passed, you would subtract your standard deduction from that $35,000 and calculate taxes on whatever is left. But under the new rules, you subtract the standard deduction and you subtract another $6,000 because of the senior bonus. That means you are paying taxes on a much smaller slice of your income. For most retirees in the 10 to 22% tax bracket, this $6,000 deduction translates into real savings between $600 and $1,320 in actual dollars that you do not have to pay to the IRS. For a married couple where both spouses are over 65, the $12,000 bonus deduction can save anywhere from $1,200 to over $2,600 depending on their tax bracket. Now, $1,000 or $2,000 might not sound like life-changing money to some people, but if you are a retiree living on a fixed income where every dollar matters, That is a month of groceries. That is several months of a utility bill. That is a medical copay you do not have to stress about. That is money that belongs to you. Money the government literally wrote into law and said, this is for seniors, and it should not be left behind. Here is something very important that you need to understand clearly. This deduction is not the same as the old extra deduction that already existed for people over 65. Before this new bill was passed, seniors already got a small additional standard deduction amount on top of the regular standard deduction. That old extra amount was around $1,950 for single filers, or $1,550 per person for married couples. That old benefit still exists. It did not go away. The new $6,000 senior bonus from the One Big Beautiful Bill is completely separate and completely additional. So if you are 65 or older, you are now stacking 3 layers of deductions. Your regular standard deduction, the existing age 65 extra deduction, and now the brand new $6,000 senior bonus deduction. All 3 of them working together at the same time. That is a powerful combination that most tax software and even many tax professionals have not fully caught up to yet. When you walk into a tax office or sit down with TurboTax, you need to specifically make sure that all 3 of these layers are being applied to your return. If even one of them is missing, you are paying more than you should. Now let us talk about who qualifies, because not every senior automatically gets the full $6,000. The IRS put income limits on this deduction, which means the amount you can claim starts to shrink once your income goes above a certain level. Here's the rule. If you are a single filer and your income is below $75,000, you get the full $6,000. If your income is above $75,000, the deduction starts to phase out, meaning it gets smaller as your income goes higher. For married couples filing jointly, the full $12,000 is available if your combined income is below $150,000. Above that, the same phase-out happens. Now, the word income here refers to something called your modified adjusted gross income, which most people just call MAGI. Your MAGI includes your wages, pension payments, withdrawals from retirement accounts like 401k or IRA, interest, dividends, and yes, part of your Social Security benefits. It does not include everything, but it does include most of the money that flows into your household. If you are not sure what your MAGI is, the easiest thing to do is look at last year's tax return on line 11 of Form 1040. That shows your adjusted gross income, which is very close to your MAGI for most retirees. Let us talk about Social Security specifically, because this is where a lot of confusion comes in. Many seniors ask, does this $6,000 senior bonus eliminate the taxes on my Social Security? The honest answer is no, it does not. The One Big Beautiful Bill did not change the formula that the IRS uses to calculate how much of your Social Security is taxable. That formula has been in place for over 40 years, and it was not touched by this new law. Depending on your total income, anywhere from 0 to 85% of your Social Security benefits can still be counted as taxable income. What this new $6,000 deduction does is help offset that. It does not make your Social Security tax-free, but it does reduce the overall income that the IRS taxes you on, which can end up having a positive effect on how much of your Social Security actually creates a tax burden. Think of it this way. If you owe $1,500 in taxes because of your Social Security income, and then the senior bonus deduction cuts $1,000 off your bill, you are still paying some tax on Social Security, but you are paying $1,000 less. That is still a real and meaningful win for your retirement budget. The point is to claim every legal benefit available to you, and this deduction is one of the most significant ones added to the tax code for seniors in decades. Now here's the part that trips up the most people, and this is the most important practical information in this entire video. The $6,000 senior bonus deduction is not automatic. I want to say that again clearly so it really lands. The IRS will not automatically give this to you when you file. Your refund does not automatically include it. Nobody is going to call you and say, hey, we noticed you qualify, here's your extra money. The only way you get this deduction is if you actively claim it on your tax return by filling out a brand new form called Schedule 1A. This is a form that did not exist before the One Big Beautiful Bill was passed. It is a new schedule that was added to the 1040 filing process specifically to handle this senior bonus deduction. If Schedule 1A is not attached to your return, the deduction does not happen, period. The IRS will process your return without it, and you will never see that money. This is exactly why so many seniors are missing it right now. Their tax preparers filed their returns using the same process they used in 2024. They did not think to add Schedule 1A. They did not ask about the new deduction. The return looked complete and normal. It just had a $6,000 hole in it where the senior bonus should have been. If you paid someone to prepare your taxes this year and you are 65 or older and your income is below $75,000 as a single filer or $150,000 as a married couple, you need to pick up the phone today and ask your tax preparer one specific question. Did you include the Senior Bonus Deduction from the One Big Beautiful Bill Act on my return using Schedule 1A? That is the exact question. Write it down if you need to. If the answer is yes, great, you are good, and I am glad you confirmed it. But if the answer is, what is that, or I do not think that applies to you, or any kind of uncertainty, that is a red flag. That means you may have filed without this deduction, and that means you may have paid taxes you did not actually owe. The fix for that situation is called an amended return, which I'm going to explain in detail a little later in this video. But for right now, the first step is knowing whether this happened to you. Let us also talk about people who file their own taxes using tax software like TurboTax, H&R Block, Free Tax USA, or similar platforms. If you used one of these programs and you filed for the 2025 tax year, which means you filed in early 2026, the software should have asked you about your age and whether you qualify for any senior-specific deductions. If you answered honestly that you are 65 or older and you entered your income information correctly, most of the major tax software programs have been updated to include Schedule 1A and the Senior Bonus Deduction automatically. However, and this is very important, not all versions of every software platform were updated at the same time. Some people who filed early in January or February of 2026, right when the filing season opened, may have used a version of the software that had not yet fully incorporated the new schedule. If you filed early and you are not sure whether Schedule 1A was included, you can check your filed return. Look through your documents. If you see Schedule 1A attached, you are fine. If you do not see it and you believe you qualify, it is worth having a tax professional look at your return to see if an amendment would benefit you. Here's a question I know is on your mind right now. What if I already filed my taxes and I did not get this deduction? Is it too late? The good news is absolutely not. The IRS has a process specifically designed for situations like this. It is called filing an amended return, and you do it using a form called Form 1040-X. When you file a 1040-X, you are essentially going back to the IRS and saying, I made an error on my original return. I left out a deduction I was entitled to, and here is the corrected version. The IRS will review your amended return, recalculate your taxes with the senior bonus deduction properly included, and if you overpaid, which in this case you likely did, they will send you a refund check for the difference. The time limit for filing an amended return is generally 3 years from the date you originally filed, or 2 years from the date you paid the tax, whichever is later. So if you filed your 2025 taxes in April 2026, you have until around April 2029 to go back and amend it and claim the senior bonus deduction you missed. That is 3 years of runway. But I would not wait. The sooner you file the amendment, the sooner the refund comes back to you. And there is no good reason to let the IRS hold money that belongs to you for even one extra day. Let us walk through exactly what this looks like in a real household situation so the numbers become completely real and not just abstract. Meet a woman named Margaret. She is 68 years old. She lives alone. She receives $18,000 a year from Social Security and $14,000 a year from a small pension she earned during her working years. Her total income is $32,000. Now, under the old rules, she would subtract the standard deduction of $16,100 for a single filer, and she would also subtract the existing age 65 additional deduction of $1,950. That leaves her with taxable income of about $13,950. At a 10% tax rate, she owes roughly $1,395 in federal taxes. Now, under the new rules with the senior bonus deduction added, she subtracts the same standard deduction, the same age 65 deduction, and she subtracts the new $6,000 senior bonus. Now her taxable income drops to around $7,950. Her tax at 10% is only about $795. The difference is $600. Margaret just kept $600 that she would have otherwise paid to the IRS, simply by knowing about one new form. For someone on a fixed income of $32,000 a year, $600 is not a small amount. That is nearly 2% of her entire yearly income. That is real, and it is hers by law. Now, let us look at a married couple. Meet Robert and Patricia. Robert is 71, Patricia is 68. They receive Social Security, and Robert has a small IRA withdrawal each year. Their combined income is $58,000. They both qualify for the Senior Bonus Deduction. Under the new rules, they can claim $12,000 combined as their senior bonus on top of their $32,200 standard deduction and their existing age 65 additional deductions. When all of these deductions stack together, their taxable income drops significantly. Instead of paying taxes on $58,000, they may end up paying taxes on a number close to $10,000 or less, depending on how all the deductions line up. At a 10 or 12% tax rate, the savings from adding that $12,000 senior bonus can be between $1,200 and $1,440 in real dollars back in their pocket. For Robert and Patricia, that is money they can spend on their grandchildren, their prescriptions, their car insurance, or whatever they need. It is their money. The law says it is their money, and they just have to know how to claim it. Let us address something that a lot of retirees worry about when they hear about new tax deductions: the fear that claiming something will trigger an audit. This is a very understandable concern, especially among seniors who have always been conservative with their tax filing. But let me be very direct with you. Claiming the Senior Bonus Deduction is not an audit trigger. It is not a gray area. It is not a loophole. It is not something sketchy or aggressive. It is a deduction that Congress specifically wrote into law, that the IRS officially recognizes, and that is clearly documented in IRS guidance published on their own website. Millions of Americans are expected to claim this deduction over the next several years. AARP has publicly stated that as many as 30 million seniors qualify. When you claim this deduction properly, using Schedule 1A with accurate income information, you are doing exactly what the law says you are allowed to do. The IRS does not penalize people for correctly claiming legal deductions. In fact, the only risk you run is the opposite one: not claiming it, paying more than you legally owe, and missing out on money that is rightfully yours. Something else that is critical to understand is that this Senior Bonus Deduction has an expiration date. The One Big Beautiful Bill Act wrote this deduction as a temporary measure. Under the current law, the Senior Bonus Deduction is available for tax years 2025, 2026, 2027, and 2028. After 2028, unless Congress takes action to extend it, the deduction goes away. That is a 4-year window. It sounds like a lot of time, but here is why that urgency is real. By the time you hit 2028, you will have used up most of those years. And once it expires, people who did not take full advantage of every available year will have permanently missed that money. There is no going back. There is no extension guarantee. Congress may renew it, they might not. Smart financial planning means using every benefit that is currently available to you right now in the years it actually exists. Do not assume it will always be there. Take it every single year that you qualify. File correctly, claim Schedule 1A, get every dollar that this law makes available to you. Because the window is open today, but it will not stay open forever. One more thing that many seniors do not realize: this deduction can interact with other parts of your tax return in ways that create even more savings beyond just the $6,000 itself. When you reduce your taxable income using the Senior Bonus Deduction, it can sometimes push your total income into a lower tax bracket, which means a lower percentage of tax on your other income too. It can also reduce how much of your Social Security is considered taxable, because Social Security taxability is calculated based on your combined income. And when the deductions reduce what is counted, sometimes less of your Social Security gets taxed as a result. Additionally, for people who are paying Medicare Part B premiums, the income level that determines your Medicare premium costs is based on your MAGI from 2 years prior. So while the senior bonus itself does not directly affect your Medicare costs today, proper tax planning that keeps your income lower over time can have a ripple effect on future Medicare premium calculations. This is why working with a tax professional who understands all the moving parts of retirement taxation is so valuable. Each piece connects to the next. One smart deduction can unlock savings in multiple places at once. Let us also talk about something very practical. What to actually say and do if you need to take action after watching this video. If you have not yet filed your taxes for the 2025 tax year, the path is straightforward. Make sure you file with Schedule 1A. If you are using software, update it to the latest version and go through the senior-specific deduction section carefully. If you are using a tax professional, tell them specifically that you want to claim the Senior Bonus Deduction from the One Big Beautiful Bill Act on Schedule 1A. Do not assume they will do it without being asked. If you have already filed your taxes without this deduction, ask a tax professional to review your return. If you qualify and it was not included, they can file a Form 1040-X amended return on your behalf. Most tax professionals charge a fee for amended returns, but that fee will almost certainly be far less than the refund you are going to receive. If you cannot afford a tax professional, look into free tax help options. The IRS has a program called Tax Counseling for the Elderly, known as TCE, which provides free tax preparation help specifically for people 60 years old and older. There are also VITA sites, Volunteer Income Tax Assistance, where trained volunteers prepare returns for free for people who qualify based on income. These resources exist, they are real, and they can help you get this money without spending a single dollar out of pocket. I want to take a moment to talk about why this matters beyond just the dollars. There is a deeper issue at play here, and I think it is important to name it clearly. The tax code in the United States is extraordinarily complicated. It is so complicated that even professionals who study it full-time sometimes miss things. And when the tax code is this complicated, the people who suffer the most are the ones who have the least access to expert advice, which, very often, is exactly retired seniors on fixed incomes. The people who have accountants and financial planners and legal teams on retainer will always find every deduction, every dollar of savings, every possible advantage the law allows. But the person who worked a regular job their whole life, retired, and is now managing money carefully on a pension and Social Security, that person might not even know to look. That is not fair. That is not right. And that is exactly the reason this channel exists. Every single video I make is about closing that gap, about making sure that the information that wealthy people pay to access is freely available to every retired American who needs it. The $6,000 senior bonus deduction is yours by law. You earned it, you deserve it, and now you know it exists. Before this video ends, let me give you a very short and clear list of the most common mistakes that seniors make with this deduction, so you know exactly what to avoid. The first mistake is assuming your tax preparer already handled it without confirming. Always ask directly. The second mistake is filing too early in the season before your tax software was fully updated to include Schedule 1A. If you filed in January 2026, check your return carefully. The third mistake is confusing the new $6,000 senior bonus with the old age 65 additional deduction that already existed. These are two separate things. You need both. The fourth mistake is assuming you do not qualify because you think your income is too high without actually checking the phase-out numbers. Many people underestimate their eligibility. The fifth mistake is deciding not to file an amended return because the process sounds complicated or intimidating. The process is not nearly as difficult as it sounds, and the refund that comes back is absolutely worth the effort. Knowing these 5 mistakes puts you ahead of millions of seniors who are going to discover they left money behind only after it is too late to do anything easy about it. I want to leave you with this thought. Retirement is supposed to be the season of life where your hard work pays off. You spent decades contributing to this country through your labor, through your taxes, through your communities. This $6,000 senior bonus deduction is the government's way of giving a small portion of that back to you during a time when every dollar of your fixed income has to stretch as far as possible. The money is there, the law is written, the form exists. All that stands between you and that $6,000 is knowing that it exists and taking the steps to claim it. You now know it exists. The next step is yours. Share this video with every retired person in your life, your spouse, your friends, your siblings, your neighbors, because right now, the people who watch this video and take action are the ones who keep their money. The people who do not know about it will file the old way, pay the old amount, and never realize what they missed. That is the difference between being informed and being uninformed. And that difference right now is worth $6,000. Subscribe to this channel so you never miss another update like this one. because the IRS makes changes every single year, and I am here every single day making sure you know about every single one of them before they cost you money you cannot afford to lose.